Okay. So I repeat that 10% also is not a risk to you, because that money is held in a solicitor's escrow account. Now some of you, and I know I have met a couple of you here, they are developers, they are builders here, and you probably are thinking, okay, if I don't see the money, how do I construct? Right? If I don't get the money, how do I construct the building? Probably do a, let's say, $20 million project. I don't have 20 million to fund the whole thing. Well, the bank funding kicks in. The banks actually fund up to 80% or even sometimes slightly more to the developers to fund the project, right? So, well, that's a different story, and we'll talk about that maybe at a different forum. Let's continue. Suren said property prices in Mumbai have been growing. Everybody says it's been growing. I Googled things differently because that is the scene of Mumbai property growth price, Mumbai property growth rates in last year, negative 1.5%. How many of you agree with that? So how many of you don't agree? Quite a few don't agree. I've got sources down here, by the way. So I can actually send you this link so you can look at where these numbers are coming from. Like I said, I'm not a Mumbaiite anymore. So for some people who say that, hey, I can challenge that, well, fair comment. You can challenge me, but I've got a source here which says that the Mumbai property rates have gone negative 1.5%. Now, having said that, I like to tell you this. Sydney, the growth rate is what? 17% in the last year, and that also is a source. But I'll tell you something different because I am in Sydney. Property prices in Sydney have actually grown up to 25 to 30% in the last year, not 17%. Yeah. Now, why is it that this average is only 17 when I'm telling you that the property prices growth rates have gone more than 20-30%? The reason is that these rates actually take averages from the whole city. There are some really bad spots, some really good spots, and they average out. And probably that's also the reason why Mumbai shows negative 1.5. Do you understand what I mean? So for those who don't agree with me, you understand where I'm coming from, right? Okay, anyway, so let's not get into a debate there. The last reason, which I believe is the strongest reason why investment in Australia makes total sense today, is the exchange rate. Suren talked about this, saying that he bought a property in Bangalore. Was it Bangalore? He bought a property in Bangalore. I think how many years was that ago?
It took 7 years to build.
It took 7 years to build. Okay, fair enough. But after it was built, how many years he held it? The property doubled. But in dollar terms, which is the uniform currency around the globe, his money remained the same, right? Because the rupee fell in value. As simple as that. Do you agree with me? So exchange rate is a very important criteria that we all need to understand if you are going to go global as far as investment is concerned. And the first thing here is that Australian dollar was 60 rupees to 1 Australian dollar, I think about 5-6 months ago, about 6 months ago, average 6 months ago, it was 60 rupees to a dollar. Now it's fallen to 48 rupees to a dollar, and Modi government is desperate to try and pull the rupee further down because ours is a developing country, right? And we can't afford to have a very strong rupee. Do you agree with me? So by the way, that figure there, you can see the gap. It's almost 25% if you see, correct? That means if we were to come back to its original of whatever it was 6 months ago, without having to do anything, even if you assume your Australian property prices does not increase, even if it doesn't increase, your value of the investment will grow by 25%, just on dollar exchange. Now let's do one thing, let's run some numbers. So Paul did show you a few clippings. Obviously these were just clippings, we can't expect you to understand everything that we have discussed here. So the whole idea was that after the event maybe we can sit together and show you more details of each and every brochure and plans and whatnot, to go into the details, or a one-on-one again like I told you. But let's take a typical situation, because as investor, more importantly, how much do I have to pay? Okay, I have taken an example, by the way, in rupees, simply so that we don't have to sit in your minds here calculating times whatever, 48, 49, right? So Typically, let us say for example, I have assumed 50 rupees to 1 Australian dollar, simple. It's about 48, 49, say 50. So a $500,000 apartment, that means about $5 lakh apartment, would typically convert to 2 crore 50 lakh rupees, correct? Now 2 crore 50 lakh rupee investment is the property value. How much are you going to pay? You will pay 10% now when you are signing a contract if you purchase. So 10% means you are paying 25 lakh rupees now. Then you will pay another 10%, that is another 25 lakh rupees on possession, that means on completion. Now if you are buying something under construction, like just to give you an example, Paul mentioned Mooney Ponds, that is CBD of Melbourne. If you were to buy that, you're probably looking at another year or year and a half to finish. Suzanne, is that? Yeah. About what, year and a half or 2 years, whatever, to finish. So that balance 10% you will pay after a year and a half. So 25 lakhs now, 25 lakhs after 1.5 years. So your investing is 50 lakhs. You will get a bank loan of 2 crores. Now bank loan, which bank will lend you 2 crores? We will arrange for an Australian bank to lend you 2 crores. Obviously if I have to borrow from an Indian bank, then the whole proposition doesn't make sense, not much sense anyway. The idea is that we want to borrow money at that 4.5 or 5% interest rate. Do you agree? Right? So we will arrange for an Australian bank to lend you 2 crores. Obviously bank, just like an Indian bank, will lend you on your income credentials. So similarly an Australian bank will look at your Indian income credentials to lend you money. Obviously there are some other costs as well, like you buy a property in India, you have to pay stamp duty, correct? So you have some stamp duty, some legal fees, lawyers, solicitors fees, some extra costs. Now stamp duty, and this is something which I have to honestly accept, Melbourne is far better than Sydney. Mr. Paul, I must say, simply because in Melbourne, if you're buying a property under construction, you are paying literally no stamp duty, right? But the stamp duty in New South Wales, that means in Sydney, is about 3.5%, roundabout. So, but in Melbourne, the stamp duty is 0. So that's a critical advantage. Now let's go through, if you buy that property, how will your income work? How will your expense work? How much do you have to pay to maintain that property? Clearly, if you buy a property in India or Mumbai, you buy it and then you have to pay money every time, every year, every month for maintenance. Is that right? Maintenance charges, whatever it's maintenance charges, and then you have to hope that you'll find a tenant at that 22% vacancy rate. Probably 6 months in a year, your property is vacant, averaged. Do you agree? So here, if you buy that property, what happens? You receive rent. Rental yield is 5% of the value of the property. That's just what I just told you, right? Now that's a ballpark. It's like a thumb rule in Australia. Typical 4.5 to 5.5%. If you get a very good buy, you'll get 5.5%. If you get a decent buy, you'll get 4.5%, right? So 5% is typical average rental yield. So you will earn 12,50,000 rupees on your investment every year. This is an annual. Then you pay expense. You pay interest on your loan, correct? By the way, you borrowed how much percentage? 80 or 90? 80 or 90? It's a test. I just want to know if you're actually listening or sleeping. 80%, right? Because you're paying 20, 10% now, 10% on possession, remember? Okay, good, you pass. So say 80% you're paying 5% interest. By the way, notice here I've taken 5% interest. I've taken a higher number. Typically around 4.5% is 4.5 to 4.75%. Let's assume 5% interest rate, all right? So you are paying 10 lakh rupees as interest on the loan. Your other expenses, typically in Australia on a standard 2-bedroom apartment, I could say with reasonable amount of confidence, your all other expenses add up to $5,000 a year, which typically converts to about 2,50,000 rupees a year. Do you understand that? So if you see our expenses are 12,50,000, our income is 12,50,000, That means you earn nothing, you spend nothing, your property is maintenance free. Once you buy a property, the rent takes care of everything including the loan. You see where I am coming from? Your property takes care of everything including your loan. Now, Suren in his presentation showed you last 100 years of property growth in Australia, correct? Paul in his presentation talked about the property growth rate in Melbourne in the last 5 years, and both of them came down to these numbers that property growth rate averages between 5 to 6.5–7% on a long term basis in Australia. Now, the fact really remains that currently the property growth rate is far higher than that 6–7%. Sydney growth rate has been around about 25% in my personal experience, 17% as per Google, right? But I am assuming a growth rate of normalized 6% a year. Did I take 6%? Yeah, 6% a year, right? Australia, the CPI, the inflation index in CPI is about 3.5%, around 3%, correct? And typically any asset will outgrow the inflation rate, especially property. So from that perspective, 6% is a good number to consider, an average number. And remember, I am not considering the current growth rate, which is high. At 6%, your property, which was 2 crore 50 lakhs, will grow every year at 15 lakh rupees. Do you agree? You don't have to agree, I have done the calculation here. 15 lakh rupees is the increase in the value of the property each year. Now, may I ask you a question again, second test. How much money have you invested in this property? Sorry? 50 lakhs, is that right? So, on your 50 lakh investment, how much are you earning every year? 15 lakhs. If I convert that as a percentage, your investment, return on investment is what? 30%, right? How much does your term deposit, fixed deposit give you here? 8%, 8.5%, do you agree? Right? How much has share market grown over the so many years, last 5 years or 10 years? 30% average, 10 years? 12%, somebody said 12% share market. And I have already shown you what your property investment in Mumbai can grow to, if you were to realistically understand how the property market is working. This gives you a realistic 30% growth on your investment annualized. By the way, I need to qualify something here before you go ahead. Please remember, don't expect this. After 1 year, I must have 15 lakhs in my pocket. This is growth in your asset. Your wealth is increasing by 15 lakhs. Do you understand? Right? And we are assuming that you are purchasing a property from a long term perspective. Now, property prices, just like any other asset, either in India, you buy in Australia, buy in Canada, buy in South Africa, doesn't matter. There are cycles of growth, and then there's cycles of stagnancy, and there could be even fall, right? So, somebody asked me a question, can these prices fall? Stupid question, but a clear answer. Of course it can fall. Do you agree? Property prices can fall. But my point is, if you are looking at an investment over 10-year span, will your property price fall? Definite answer, it will not fall, because we have considered an average growth rate of 6% annualized. Do you understand where I am coming from? Right? So, you look at a long term investment strategy, because we are looking here at a wealth building exercise, not a short term process of what is that share market term? Tip Miller, right? Put some money and then sell it after 15 days or whatever. Not that. The other aspect, which is again an advantage, is the loans that we structure for you in Australia are interest only. I had meetings last couple of weeks ago in Mumbai with quite a few people, and it was difficult for them to digest what I just told them. The loans can be interest only. We structure interest only loans. Interest only loan means that when you get a loan, you know how you pay the EMI every month? The EMI is the equated monthly installment, right? That EMI is basically a combination of the interest and the principal. That means you are also paying the loan every time, right? Right. But in Australia, we will structure the loan in such a way that you don't pay the principal at all, right? I'm surprised half of you should have actually got up and walked away from here after hearing this, because many people actually said, what are you talking? Why will I not pay my loan? What type of an advice is that? Of course I'll pay my loan. I want to pay my loan.
I'm sure that we are running out of time, and probably we are hungry as well. So I'll try and keep my discussion a little very concise, and probably we want to have a discussion on one-on-one basis. So currently, though I have couple of slides, but we'll try and see what important aspects which are there. We are covering those aspects only. Basically, what we are trying to see is that are there any business opportunities which leads us to having an option to migrate to Australia, and what are the things which we need to bear in mind while we are doing such an exercise. So there are a couple of options which are available. What we have tried to cover is only 2 options over here. Probably we'll look at other options if required, but currently these 2 are very relevant to the what opportunity which Sumo has brought in for us. By the way, this presentation is being prepared by my Australian office, and I am just presenting it. So some of the questions which you may have, probably I may not be able to answer, but I can definitely come back to you after some time, and I will leave my cards there. You can pick up the card and you can drop me an email, and I'll respond to you guys then. So basically we are looking at 2 alternatives right now, where business talent permanent visa, where it allows you to obtain a permanent visa, and then we have a business innovation and investment visa class. So these are the 2 provisions under which one can apply for permanent visa to migrate to Australia. So I think we'll skip this. This is more about how you can mix your business with migration opportunities. So in business visa, there are 2 streams where you can make investment in, and which leads you to migrate to Australia. One is where you are participating in a management in a new business as well as in an existing business, and another one where you get a venture fund investing in your business and up to $1 million, and which allows you to migrate to Australia. Now, when any venture fund making an investment, it has to be a member of Australian Private Equity and Venture Capital Associations, and all these venture funds are generally being approved by them. Now, what are the criteria, who can apply, how they need to see that whether they are falling within this category or not, and whether they can avail the benefit or not. There are standard criteria, and there are other significant criteria, mainly relating to standards, age and financials. Important aspect in this is that person should be having a legitimate business and transferring all legitimate funds. So basically knowing that Indian industry and have a parallel economy, one is cash, one is non-cash, and how it works. So basically you should be able to demonstrate these are all lawful money and you are able to transfer it over there. Second aspect and most important aspect is that your involvement in not acceptable businesses are not there in Australia, and these are the basic criteria. If you do not meet, most likely that you will not get any visa. Another thing which is that whenever you are doing any business or anything in Australia, the territory or the government agency in that territory should be able to nominate you, and you need to clear those parameters to get this kind of visa. And what are those kind of parameters are the people who are into significant business history stream, where they have a good history of business which they have either in India or elsewhere in the world. And there are various financial criteria which are been laid down, and I do not want to step into Mehul's territory, being part of number crunching. But certainly another edge factor is very important aspect which is being considered. Those who are above 55, probably they have to satisfy certain another criteria to be eligible for migration. And here we are looking at young people who are investing, and that is what we heard from Paul and everyone over here. So, probably I do not think that is an important aspect. Another aspect is that when you have a venture fund investing in your business, what you have to observe is that there is